Coinbase is about to drop the bass and go public sometime in March 2021. Being the largest cryptocurrency exchange in the US, what does this step mean for retail investors who would be interested in buying some Coinbase shares and for the cryptocurrency market in general? In this video, we're going to see what Coinbase is, how it makes money, why exactly is it going public, and will it help make cryptocurrency more mainstream? But before we continue, here's two short disclaimers. First, this is not investment advice, but just pure entertainment. And second, this is going to be extremely biased. Oh, and third, I need your help to smash the like button. So, Coinbase is basically two companies. First and most known to everybody is a brokerage. You can download the Coinbase app on your phone and buy dozens of cryptos using fiat money such as dollars or euros. Think of it as a Charles Schwab or Robinhood for accessing the stock market. Then, they also operate an exchange, which was originally called GDEX, which stands for Global Digital Asset Exchange. Think of it as the New York Stock Exchange for trading stocks. Later, the GDEX was renamed to Coinbase Pro. And given that they also have a service called Coinbase Prime, which targets big institutions, that makes it just enough names to start confusing newcomers. So, Coinbase is making money by collecting transaction fees when people buy and sell cryptocurrencies. They differ per country and payment method, but generally can go up to around 4% for retail traders, and it gets lower from here on Coinbase Pro as the amounts traded get bigger. Nothing special and absolutely not different to any other cryptocurrency exchange out there. But here's the thing. Even though Coinbase showed a profit of $322 million in 2020, the bulk of it is due to the Bitcoin bull run the same year. That's because Coinbase revenue depends mainly on the transactions of Bitcoin and Ethereum, which makes its revenues almost as volatile as the prices of these cryptos. Therefore, just one meme tweeted by Elon Musk could collapse the whole company. I'm joking, of course, no, I'm not actually. That's totally plausible. I'm surprised they didn't include this risk in their S1 filing. Now, Coinbase wants to pursue a direct listing on the Nasdaq. So basically, what we're having here is an exchange going public on an exchange. But before we continue about the consequences this will have on the crypto industry as a whole, let's first ask ourselves, why do companies actually go public, right? Everybody is talking IPO here, direct listing there, but what's actually the point? Believe it or not, originally the main idea of public listings was to allow companies to attract more capital to grow their operations. It could be a medium-sized company with a working business, meaning that it was actually making money, yeah, I'm not even joking, but it needed investments to grow its business further, like buying equipment and machinery, entering new markets, and so on. So people buying shares of these companies were betting on the fact that they had indeed a lot of room to grow and that they actually needed money to do so. Eventually, they would expect this company to start paying them dividends. But that ship has sailed, as everybody knows. For most new tech companies, you can kiss dividends as goodbye. These days, a lot of IPOs have been hijacked as a way for founders, early investors, and some employees to finally make tons of money. That's what they call an exit. When a startup is created, founders who attract investment from venture capital don't see their main product as their main product. No, the actual startup itself is the main product that is going to be, well, sold either to a bigger company or to retail investors on the stock market, hence recent IPOs. Then, the stocks of these companies become so-called growth stocks, which retail investors and institutions buy, expecting them to grow. Because they believe that everybody else expects them to grow, therefore actually making them grow, even though they will never pay dividends. Sounds like a bubble? That is especially blatant when it's obvious that a so-called startup, which is actually 10 years old, has already achieved most of its growth. When Airbnb went public, it already captured most of the market and the brand was famous all around the world. That's more or less the same situation with Coinbase. Even though they claim that they have a lot of opportunities to grow, the reality is that their growth will be dependent on the organic growth of the crypto economy as a whole, and of which they are just one actor among others. But when it comes to their main products, those are already well developed and established in the industry. In addition to this, they are doing a direct listing instead of an initial public offering. And while there are several differences among these strategies which are of no interest to us here, a direct listing allows shareholders to sell their shares immediately after being listed on an exchange, while an IPO requires them to wait out a lockup period that can last up to 180 days to stabilize the stock price. So there are many reasons why more and more tech companies use direct listings instead, but the ability to cash out and immediately take their personal gains is obviously a major one. Airbnb, for example, was originally considering doing a direct listing, but went for an IPO instead. Back in time, only IPOs could raise new capital from the public markets. So when Airbnb didn't need this capital, they were only interested in a direct listing so that founders, investors, and early employees could make bank. But when the COVID hit their business model and Airbnb almost went bankrupt, they changed the strategy and did a traditional IPO instead in order to raise a few $1 billion to stay afloat. So yeah, the reality of this is that when buying into a public company like this, we, the retail investors, are at the end of the line, and basically we're rewarding the founders, early investors, and employees with our money for their work and risks taken. And if that company can still achieve a bit more growth after that, or if the irrational speculation around its stock kicks in big time, then we might make some money by trading it. Now, how will Coinbase going public impact the crypto economy as a whole? Well, you might be underwhelmed, but my prediction is that it won't have any big impact. Coinbase going public, in addition to being an exit for the company, is also good marketing. They positioned themselves as a trusted exchange since the very beginning, one which aggressively complies with regulation and which is the most secure because it has never been hacked, something that's unfortunately quite mainstream when it comes to the crypto world. So now them being listed on a public exchange will solidify this image of reliability and attract some new retail traders to cryptocurrency, but which won't be enough to take any crypto mainstream. And it's pretty obvious that they don't care about any of that as long as there are millions of people trading cryptocurrencies for no real reason whatsoever, since they collect their fees anyway. From now on, I know, I might receive a lot of hate from crypto enthusiasts and people telling me,
"You don't understand the technology."
But here's the thing. Trading crypto is all fun and stuff. Some people can make money, but it's based on nothing, especially so that Bitcoin has been hijacked away from its initial purpose. Time for some meme fest. Remember the time when Bitcoin was supposed to be a new type of currency? Well, it's a speculative asset now. So it's always funny when people compare it to fiat currency, although Bitcoin has never been a currency and is drifting further away from that purpose with each new transaction recorded on the blockchain. Also, remember the time when it was supposed to be anonymous and decentralized? Well, it might have retained some of these characteristics, but governments can have all the control they want over it, despite the ridiculous beliefs otherwise. Your data on the exchanges is known, and the transactions are publicly recorded. The reality is that governments are not scared of Bitcoin, and they will happily let these trades happen as long as they can collect taxes on capital gains. It's creating a funny paradoxical situation where crypto enthusiasts are cheering industry events that make it seem like cryptocurrencies are going mainstream, all the while these events are actually bringing the crypto market more and more under government control and scrutiny, therefore destroying one of the main premises of the product in the first place. Surely Coinbase themselves must have no delusions about what cryptocurrencies are, right? Well, apparently they do. If you read their prospectus, they want to create more economic freedom for every person and business because the current financial system is rife with high fees, delays, unequal access, and barriers to innovation. Using all these buzzwords, Coinbase almost makes us forget that all they're doing is powering the trade of cryptocurrencies, which is a far cry from having anything in common with mainstream financial services for basic mortals. But to be fair, they do make efforts to launch commercial products and enable actual daily life transactions with cryptocurrencies. But the reality is that they processed about $200 million of those in a year, which is an impressive number, of course, but which represents 0.005% of the $4 trillion global e-commerce market. For now, the two biggest cryptocurrencies remain speculative assets. After more than 10 years of existence, the blockchain hasn't yet produced anything tangible and didn't find any real purpose, despite all the innovation buzzwords. But it did create a whole speculative economy based on a few popular cryptocurrencies. And Coinbase is going public in the middle of that volatile crypto Far West to capitalize on the current Bitcoin price hike and the boiling hot stock market. Nobody knows which way their share price will go, but one thing is for sure, the current shareholders will reach their goals. To recap, a lot of genius people are developing extremely complex but practically useless products. Hopefully, the money and brains will one day start moving away from unnecessary protocols, advertising algorithms, and mobile apps that let you know when your friends are at the bar to more useful and valuable products once again. Let me know if you agree or not in the comments, and smash the like button if you enjoyed this video. See you soon!